Yo, what is good, YouTube? We're back with another video. Today we're going to be going over how to identify high probability order blocks, right? So if you're not in the free Discord, go join it. It is linked down below. But we're going to be going over high probability order blocks. You should be using them. Order blocks, fair value gaps, old highs and lows, great things to use. So we're going to go over this and how you can start identifying these high probability order blocks. Now, if you don't know what time frame alignment is, I suggest understanding what that is, right? So I've went over that in a lot of videos, literally a lot of videos. So if you don't know what it is, then you have to go figure it out. So we're going to be going over these order blocks. So identifying an order block is whenever an order block, or if we are bullish when a down close candle hits a higher time frame key level and then expands from it. And if we are bearish, it is a up close candle that hits a higher time frame key level and then expands from it. It is the last down close or up close candles. Sometimes it can be a series, but we're just going to be going over the last down or up close candle because that's how I use them now. So right here in this piece of price action, what do we see? We see a swing high coming into a fair value gap. So we mark off this fair value gap. Now that we have hit this higher time frame key level and expanded from it, this down close candle that hit this higher time frame key level, the weekly chart, now becomes our order block. So this down close candle now can support price in bullish order flow to continue higher. Okay, so if we head down to the 4-hour chart to then start to identify the lower time frame order blocks, because why? Because we aren't taking weekly trades if we're day trading. So we have to find these order blocks on the lower time frame to frame trades off of. So right here in this price action, what do we see? Well, we see it hits this order block. But what is more important here? In this piece of price action, this swing lower, we see that we tag this old low. So we sweep this old low right here. So we have swept sell side liquidity right there. Now that is a key moment in price action, because when we close above this candle, now this becomes our order block. So we close above it. Now this becomes our plus order block. Notice we never come down here whenever we close above it. We hit this order block once again right here and expand from it. Now these two down close candles have now hit a higher time frame key level, this 4-hour order block, right? We come down, tap, and go. Now these two down close candles are now identified as high probability order blocks since we hit a higher time frame key level. So if we mark this off, what do we see here? We have hit this plus order block and expanded from it. Now this down close candle becomes our higher time frame key level. What do we see over here? We come down and we accumulate there. Now if we measure out mean threshold, look at the bodies here. We hold mean threshold perfectly with all these bodies to expand from it. Now if we want to go to the lower time frame, right, 15 minute to the 4-hour, I don't know if there is a setup, and I'm pretty sure this candle is news, but let's head down to the 15 minute to frame a trade off of that, right? Yes, there is. So right here, what do we see? We are at mean threshold of that 4-hour order block. We have just swept sell side liquidity. We now have a 15-minute order block. You can use this candle. You can use this candle. I just prefer the one that swept liquidity, which would be over here. This candle dug into that liquidity. Right here, come into it, hold this, and expand from it. High probability order block. Support from a 4-hour order block and sweeping sell side liquidity. This becomes your high probability order block. Right? All of that from the weekly to the 4-hour to the 15-minute. Now we could frame trades from what? Here. What do we see here? Well, this move lower swept this low. We do not get down here, but we sweep this low right here. All right, well, this is the last down close candle before sweeping sell side. What do we see? We hold it. Do we hold mean threshold? This is getting pretty ugly now. We hold mean threshold, right? This candle does close below it, but we eventually expand from this level, right? So let's head down, or let's head to another example, right? Internal to external. What do we see right here in this price action? We come into internal liquidity, fair value gap, right? The daily chart, fair value gap to external. Where's our external? It's this high right here, right? So our external level is right there. We just came into internal right there. Let's head to the 1 hour for time frame alignment. Right here is when we come into that fair value gap. Right here is our external level. What do we see in this price action right here? Well, we sweep an old low right there. Sell side, we expand from it. Right there becomes our plus order block. Well, why not this candle right here? Well, New York Stock Exchange doesn't open until here, so we wouldn't care about this price action. Right here, New York Stock Exchange opens up. This is the last down close candle that swept sell side into a fair value gap, right? And that's what we want to see. We want to see short-term lows getting swept inside of a higher time frame key level that was formed inside of that level right here. This is the beginning of that fair value gap. So these three down close candles aren't significant. This candle came into the fair value gap, comes up, now it re-sweeps it. Right, and then right here, we come down, hit that plus order block, and go straight to external liquidity. Textbook. Let's head over to oil. Right here on the weekly chart, we see internal. What do? Oops. Internal to external. Boom. Internal to external. Heading to the 4 hour. Why? Time frame alignment. Right? So, right here is where we come into that internal level. Right here is that internal level. Right here we come up, come down, sweep a high. Now we have swept a high. Buy side swept. This becomes your high probability order block. Why? This is the last up close candle before sweeping an old high. We tap that order block. Now this becomes a high probability order block. Oops, this should be a negative order block. Why does this become a negative order block, a high probability order block? Because it tapped a higher time frame key level. This order block. Now, this becomes your order block to send us lower. Why? It had price right here, hit a negative order block. Now this candle becomes another order block. Right? Now right here, you can frame a high probability trade on the lower time frame, which I did. Right? I took a trade right in here. We sweep. This becomes a huge trade that is beautiful on the lower time frame. Why? We sweep a high inside of a negative order block. Now if we head down to the 15 minute, right here, oh gosh, is that price action. Now I took this trade on the 5 minute. So right here, this is our negative order block. What do we see? We are pairing orders right above this negative order block, right? We are pairing orders and accumulating right above it. Now, what do we see? We see a 3 drives pattern. We have 1, swing low, come up, swing low. 3rd drive, now we have an order block right here. This is exactly where I took my trade. I slapped short right there on that negative order block, and I wrote it down into a 1 hour fair value gap, and I took a contract off somewhere in here for a 2R. Then I let a runner run for $1 on oil. So from 78.45, and I took it off at 77.45 or something like that. So right there, framed a beautiful trade right here. Now, last example on gold. Sorry, I just got a text. I don't even know what the example is, so we're just going to go with this. We just swept buy side on the monthly, the daily charts, heading down to the 1 hour. Now we create a failure swing right here, which is low resistance liquidity, which isn't the best, but we respect this fair value gap. Now, if we respect this, right, it is in a premium, right? This fair value gap is in a premium. Should be, yeah, in a premium. Now, this becomes an order block because it had support or resistance since we were going up and then coming down right here. Now, this candle becomes your negative order block. Right there, measure out mean threshold. We respect it here and here. Now, right here, we sweep an old high. Last up close candle. We'd have to use the wick for this one. Right here, we come into that. Boom. Expansion lower. Right here, we sweep an old high inside of a negative order block. This candle right here becomes your negative order block. We tap it, continue lower, and just keep dumping. Wow. Yeah, gold absolutely dumped this. Yeah, gold just dumped this week. But right here, you can see that we're just framing trades. You can go to the lower time frame here. We'll see right here. Oh, this is overnight. Let's find out. Yeah, this is overnight. Never mind. I'm not going to try to frame a trade right there. Where's New York session? Right here. Right there. We'll see. Can we get a trade? Oops. Can we get a trade framing a trade right here, coming into a fair value gap, sweeping an old high? Right there, we sweep that old high inside of that order block. Let's get rid of that. Right here, what do we see? Well, we are engineering liquidity. Look at all these lows. Whoa. This becomes your high probability order block. Pairing orders above an old high inside of a negative order block. Now this, after we close below it, becomes your high probability order block. Price is fractal. You could do this on the 15-second, the 1 minute, the 3 minute, doesn't matter. As long as you are using time frame alignment, boom. This is how you identify high probability order blocks, coming into higher time frame key levels, scaling down to the alignment, and then framing a trade, looking for order pairing inside of that higher time frame key level, and then we get high probability order blocks. So that's going to be the video. Hope you enjoyed. I'll see you in another one. Peace.